enable.
Hello and welcome to the 5th season of NSE FinWiz, powered by CNBC TV 18. I'm your host Gautam Srinivasan, and we're here to tell you everything about personal finance and wealth creation. My team and I are at Guntur in Andhra Pradesh at the agri-business headquarters of one of India's leading consumer products manufacturer, ITC.
ITC Agribusiness is one of the largest integrated agribusiness enterprises in the world. With decades of experience and a skilled employee base operating across diversified businesses, ITC Agribusiness is revolutionizing the agricultural sector in India. NSE FinWiz, with its theme Dream On, engaged the employees at ITC in Guntur to understand their thoughts on financial planning and wealth creation.
Today's world is more of large disposable incomes. I started with a salary of 850 rupees. People today, with the same level that I joined, earn 18-20 lakhs. But I'm a bit concerned whether they have the habit or even the knowledge of how to invest. I think they learn from each other, which may not be the best way. And I believe that the current generation is more about here and now, spend the money, and we'll see tomorrow. So I think people need to be made aware as to why it is important to save money for the future, why it is important to start insurance right now, and how it is important to systematically build your portfolio over a period of time.
Financial literacy per se means having the knowledge of having the knowledge and the wherewithal to divert your money into channels that will be of some use to you in the future. So it is basically managing your funds and having the knowledge to manage the funds in such a way that it will aid your growth as you go along with the life.
Financial literacy is absolutely absent in our education system, especially if we look into the fields of engineering or say other science-based backgrounds, wherein we do not have any idea about how a financial field operates or how to evaluate a company or how to value these shares.
Coming new to the system where we are not taught much about financial investments in our career, so I started with banking investments as of now, and that would go for about a year and a half, and after that I'd like to make an investment wherein it will give me much better returns.
The importance of financial planning, that's the theme of today's show. It's a very important question, especially at a point where everyone is looking to make their money work for them. There are a lot of myths associated around with it, and we're here to debunk those myths with the experts. And let me quickly introduce you to them. Harshvardhan Rungta, Certified Financial Planner at Rungta Securities, and Mr. Pankaj Matpal, who's the MD and CEO at Optima Money Manager. So let's kick things off with the central question, the importance of financial planning. Harshvardhan, let me come to you. List to us the benefits of a proper financial plan for the audience.
Well, Gautam, if you're looking at creating a financial plan, it's most essential that we think about it as an activity itself. You cannot plan for anything, or you cannot start investing unless you've made a concrete plan. So imagine a situation, you just decided that I want to go on a vacation. You step out of your house and you search for an appropriate mode of transport, which at that point you think is good enough, and then you take that mode of transport. Now, if you were going to say Hyderabad, okay, and the appropriate mode of transport for you in that situation was a bicycle, is this the right mode of transport to get to Hyderabad? Wouldn't there be a better mode of transport? Now, this could have been planned better had you thought about it in advance and booked the appropriate vehicle to go. So, if you don't make the financial plan, you'll be riding a bicycle to Hyderabad when you should be actually taking a flight, or you should be hiring a car.
Mr. Matpal, coming to you. What's the pitch that you as an expert on financial planning gives to someone, say, approaches you who's new to this and who says, why should I be doing it at all? What would you say to them?
First and foremost thing in financial planning is that setting up realistic goals and then making a plan to achieve it, then thinking about the asset classes, within asset class, when I say asset class means equity, debt, gold, silver or real estate, where you should invest. And then you should think which kind of scheme in that asset class.
And in terms of perception, because sometimes some of us might be thinking, do I have enough to go headlong into financial investing? I don't have a lump sum with me. How do I go about it? How do you address these perception issues? I'll ask this question to both of you. We'll start with you, Harshvardhan.
We have a thought that I need a lot of money to invest. Well, that's not true. The best of the investments are made if you start with a small amount and you start early. So I'll give you an example which I commonly share across different platforms. If a person was to invest 1,000 rupees, okay, that's affordable by even a new recruit in your company at this juncture. So if a person was to invest 1,000 rupees for a period of 30 years, okay, and that asset grows at about 14% annualized. Okay, there are enough data points to prove that on a period of 30 years, you can invest in an asset which generates about 14% annualized return. This 1,000 rupees invested over a period of 30 years becomes 54 lakhs. That's the power of compounding.
All right. Now, before we go to the audience, I have to ask one question to Mr. Matpal, which is measuring expectations in terms of returns. Because anytime you invest and you see the returns in the first year and you wonder whether this was a good idea, what would you say to people who are watching this show and who are here in terms of how to measure their expectations in terms of returns when they start their financial planning journey?
If you want to accumulate bigger money, then definitely first thing is beating the inflation. If anywhere you're investing, there is a tax may be applicable on that. Second thing is inflation. So post-tax, after application of inflation, how much returns you get? Will it be really helping you to achieve that goal? So that is why when you're planning for a long-term goal like children education, retirement planning, your exposure to equity has to be more. Because equity as an asset class has always delivered higher returns in long term. In short term, it may be volatile. For short term, when you're planning for 1 year, 2 year, that time your debt investment like your fixed deposit, post office scheme or debt-oriented mutual fund can be a better choice. So returns, when you expect higher returns, there may be a bit higher risk of volatility. Because equity market, nature of equity market is like that only. Sometimes it goes up, sometimes comes down. But if you're investing for long term, stick to that. If market comes down also, it will go up. And good thing is, we'll discuss about that. Investing in staggered manner.
All right. On that note, we'll take a short break. We've been discussing the importance of financial planning. In the next segment, we'll be discussing goal-based investing, the importance of it. So stay tuned to CNBC TV 18. Welcome back. You've tuned into NSE FinWiz Season 5. We've been discussing the importance of financial planning, and now we are going to take a deep dive on goal-based investing. We have with us experts on financial planning, Harshvardhan and Mr. Matpal. Now, what do you think happens when people are not certain about their goals? They know that they want to earn money, but they do not have those set specific goals for which you can create a financial plan for. What to do in that instance? What would you say to them?
The first step is to identify the goals as to what do you want to save for. Now, there could be instances, as you said, that you do not have any fixed or any identified goals at this juncture. But at least you must know, do I need this money in the next 3 years or 5 years? Or it's like a holiday for me, I've burned this money up. You could even think like that. The other would be, I need to study further. I may take a break. So this is a very common thing that we see around, that you might work for a certain amount of time and then you might say, I want to go for higher education. So that could be 2 years, 3 years. So you could set aside money for that and the product would be different in this particular case. Then the second element is, if at all you've identified a goal, then you need to quantify that goal. Okay, you say, I want to save for my retirement. So that's a very common thing. I want to save for retirement. The question is how much? So there is a financial calculation in it. So unless you do that calculation, you will not know how much money you need.
Absolutely.
So this is the reason you need to identify a goal. If you don't have an identified goal, then at least have a timeline until which you don't need that money. And you need to quantify that goal. Otherwise, you'll go horribly wrong. Trust me.
And for dual income families, Mr. Matpal, arriving at a common goal between the husband and wife, what are the pitfalls to avoid and what are some of the pointers you would suggest to them?
Husband and wife planning together. See, maybe that your requirement for tax saving may be different, but for goals, it is common. For children education, for buying a car, buying a house, almost in personal finance, when we talk about goals, these are the goals: buying a bigger house or first house, or buying a car, buying something, going on a vacation, something. So whenever you plan, sit together, discuss about those goals, and then invest. Otherwise, what happens most of the time, wife is not aware of what husband has done, or husband is not aware where wife is investing. They both are saving money, sacrificing their consumption, but ultimately not sure whether they'll be able to achieve their goal.
That's a very important point for you to take the effort to thoroughly understand this space so that both of you, both the husband and wife can know what they are getting into and understand how the entire financial planning process works. Now, let's hear some more goals from the audience. What are their aspirations and see how financial planning can help them. First candidate is Mukund Kale, who is with Executive Operations in the Processed Fruits Department. Mukund, if you could get up.
I want to do a business, another 5 years time for me. Because after that, I would achieve, I would cross my 45 years age.
All right. So the amount that Mukund wants to accumulate is around 1 crore, and on a monthly basis, he can save around 25,000. His time horizon is 10 years, and he wants to start his own business. So, gentlemen, what's your advice to Mukund?
See, if you have 10 years time, start investing through SIP in mutual funds. If you want to accumulate 1 crore rupees, for that expecting say 12%, 15% returns, if you are investing in equity, how much you should invest. Otherwise, see other way around, that how much you can save from your salary and start investing it. You have flexibility. So this time, suppose you're starting with 20,000 per month. Next year, when your salary increases, plan to increase your investment as well. With power compounding, with this increment in your investment, you will be able to achieve your goal.
All right, let's hear about the dreams of our next audience member. Why Anuradha?
I would like to know what is the best mutual fund to invest for my next retirement.
Okay.
The time period is 10 years.
Okay. So just to give you a bit more detail, her dream is to plan a certain amount for her retirement, and the amount she wants to accumulate is around 50 lakhs, saving monthly 15,000 rupees, and the time horizon is around 11 years. Harshvardhan, what's your advice to her?
So at this juncture, if your focus is retirement, this money should get diverted into an equity. Now, if you understand how equity markets function, you can identify stocks yourself, you may want to pick up shares directly. Now the question is, within equity as an asset class, which are the different kind of schemes that I can invest into? So the fund houses have categorized and they've got several schemes fitting into whatever the investor requires. So there is one kind of a scheme which is called a large cap fund. So when you invest in a large cap fund, the investment will go only into blue chip companies, into companies which have a market capitalization by size, they're bigger than 10 to 15,000 crores at least. Okay, so you're investing into companies which are the best, the cream of the country. If you choose to invest in a fund which is investing into mid caps, so the horizon, the investment horizon for this particular fund will be companies which are about 2,500 crores plus up to 10 to 15,000 crores. So your investment goes into companies with a market capitalization of that amount. If you invest at small cap, it goes into lesser than 2,500 crores. And then there are multi-caps. So now if you don't know, I don't want to decide whether to invest in large, mid, small, what. So there is another category called a multi-cap fund. In this, there is no restriction that the investment will go only into large or a mid or a small. So as per the fund objective and as per the choice of the fund house, they will invest into any company which they find valuable.
All right, we come to our final audience member for this segment, L. Sarat Kumar. If you could get up and tell us about the goals that you have, we'll pass on a microphone to you.
My goal is next 5 to 10 years, I have to buy one good home. Shall I go for equity or shall I go for mutual funds?
All right, to add more details to it, his dream is to acquire a home and also to educate others, which is a very noble cause. And the amount he wants to accumulate is around 40 lakhs, and on a monthly basis, he can save 15,000 rupees, and he has about a 10-year horizon. So that's the goal that Mr. Sarath Kumar has. Mr. Matpal?
See, in your portfolio, equity and debt both are important. Equity gives you growth potential. Debt gives you more stability to your portfolio. So that is why right now the advice is that you should have higher allocation in equity. And second thing, because in longer term, the risk of volatility comes down. There is a lesser risk. So that is why start with equity through SIP route. That is another way, because when the market is down, you are getting more units. So that is another reason that it will minimize your risk of investing in equity. But when you are close to your goal, only 3 years, 2 years left, then start other way around. You should have higher allocation in debt and little exposure to equity.
All right. On that note, we'll take another short break. We've covered the importance of financial planning and goal-based investing. In the final segment, we'll be throwing the floor open to the audience to ask the questions that they have to both our financial experts. So stay tuned to CNBC TV 18. Welcome back to NSE FinWiz Season 5. Now, in the first two segments, we discussed the importance of financial planning and goal-based investing. Now, we open the floor to the audience, to anyone in the audience, to ask a question on financial planning to our panel of experts here. So, here we go.
Yeah, I am Ashish Gupta. So, my question is that we all definitely agree that we have to invest and start investing as soon as possible. So the next question is, how do we go about researching for the right fund? What should be the typical methodology one should follow, being a beginner? So that is one question I have. And the second question is about the cryptocurrencies, that is the buzzword, so to say. What is your view on that and the government's stand on that? So these are the two things.
All right. Researching on financial products as a beginner, and of course, the cryptocurrencies question. Harshvardhan.
Well, answering your first question, there are professionals who can help you create that portfolio. So one way is to do that. If you have the knack of doing it, you can surely go online and there is information available. So to begin with, the easiest way to pick the leaders in any field. So which are the top 5 fund houses in the country in terms of the assets that they're managing. So try and pick schemes out of that. I mean, you can't go wrong really with that. So that could be one way to start off, and then you can take it one step at a time as to why a particular scheme, what are the advantages, what has been its performance in the past. So you can go into those details. Now, answering your second question about cryptocurrencies, I would say, why would you need to invest in a product which is unregulated at this juncture? The government of India in that context has already announced that they're not recognizing this as an official currency.
All right, let's go to the next question. Yes.
My name is Shitanshu. What do you suggest, a mutual fund or the NPS for retirement?
Comparison between NPS and mutual fund, I'll say that both act on the same principle. This NPS also have your exposure in equity and debt like corporate bond or government securities. But the only limitation in NPS, that exposure in equity cannot be more than 50%. When you're talking about long-term goal, you should have higher exposure in equity. In that case, investing in diversified equity mutual fund and having a little exposure in debt funds will make better sense compared to investing in NPS. NPS gives you some extra tax benefit to the extent of 50,000 rupees investment in a year. So if you want from that point of view, some 50,000 rupees you can invest in NPS, but otherwise, specifically for your retirement, your exposure should be more in mutual funds.
All right, let's have the third question from you. Can we pass the mic to the gentleman, please?
So my name is Manish Jha, and my question is very basic question. So what are the common mistakes which a new investor should avoid?
First thing is to have unrealistic expectations from a particular investment. The second problem is that when you create a portfolio, suppose hypothetically you approached a financial planner, you've created a portfolio. Then when should you look at it? We start reviewing it, after 6 months maybe. You started an SIP and we have people come back to us and say that it's been 6 months, but I don't know what it is doing. You must understand that's not the time horizon you should be looking at it. You have to look at it after, say, probably 2 or 3 years. Give it time because you're investing in a piecemeal manner.
And on that note, we'll conclude this episode of NSE FinWiz. I'd like to thank our guests for providing insights on the very important topic of financial planning. And I'd like to thank our audience, the folks here at ITC Guntur, for asking all the questions that they had to plan their finances better. And thank you to our audience at home for watching. I hope you learned something. Next week, another city, another company. So stay tuned to CNBC TV 18.
This has been a really insightful program. What I learned about financial literacy and financial planning. This is something that we don't usually learn in schools, and this has been my first experience.
After today's event, all my doubts regarding mutual funds, equity, and other investment plans got solved, because I am a beginner in this field and I have so much knowledge about it. I joined the company last year and I'm looking forward to do mutual funds investment in future.